Okay, people, so we're going to start our analysis with volatility 100 index. And since it's directional bias, we will start from the 4-hour time frame. So, guys, if you watched my last video, I spoke about market structures. So, I'm going to use market structures and price patterns, or price patterns to analyze this chart and tell us what I see for the week ahead. All right. So, like I said in the previous video, when you come on the chart, look at the trend, and from the trend, look at the last two significant swing points. So, the last one, look at what it did to the previous one before it. All right. So, the last significant swing point we have here, the last two significant swing point we have here, this is the previous one, and this is the last one we had. So what did this swing point do to this previous swing point? It came significantly below it, and then we have all of these minor pullbacks on this particular impulse. This is a pullback, it's a minor one, this is another minor pullback. All of these pullback make up this particular drop to create this significant swing point. So for those of you in my academy, you understand when a swing point becomes relevant, you know what criteria it takes for a swing point to become relevant. Okay, so because we have this, right, we can easily connect our trend line to be like so, 1 and 2, right, because trend line is being connected 2 touches and more. So 1 and 2, so we have this descending kind of price. We're having price in a descending way. But from what I taught you guys in the previous video, I spoke about when you have swing points giving us swing lows, we need a particular swing point to come and create what, a lower high. We have lower lows and lower highs in a downtrend. So we have this low and a lower low, helping us to align the descending trend line there, the supportive trend line. So we have this high, and now we're anticipating a higher low, sorry, a lower high that is going to be lower than this previous high. Then we can now continue our downtrend again, like so. All right. So if you come to the current part of the market, the current section of the market, you will remember impulse and corrections, right? So we need the market to fill up this, whatever. There's an impulse here, so this is a corrective phase the market is creating right now. The market is currently in a corrective phase. On this time frame, it's in a corrective phase, trying to form something like a bullish flag, meaning we will have price do like so, push up, down, give us little ups again, maybe come down, or maybe just break significantly to somewhere above, and then to create the lower high before dropping, or give us a proper flag. Then when we get to somewhere like so, then we get the last drop, and then price finally will create a lower high here, which is going to be lower than this previous high. All right, then after that we can now connect our, what is it called, descending trend line to approve the downtrend. Now for those of you that deals with structure within structures, pattern within pattern, trend within trends, you can see that we have on this trend within, we have this 1 2 third touch, like so, and then we have this 1 2 third touch, like so. So price did as if you want to reject. That is where we talk about liquidity. So when we significantly break above this, we will look at price to come and take the 90% of this. So when it takes the 90, then we significantly will get the lower high there. So after taking the 90, we will anticipate a drop. Then we can say something like so. So I think that is all for volatility 100. It's clear enough. Because we're not looking at entries, I'm not going to my entry time frame, which is the 5 minute, and then 1 minute for entry, 5 minutes for final direction, and 1 minute for entry. So if you want to trade it like so, this is my direction. We need that push up first before we come down. So since you have to focus on the current ends before we go further to the future, we have to focus on buying volatility 100 index. So when you go to the lower time frames, you have to filter your reasons to get into the buys. And you can see on the 1 hour we have this reversal pattern right here, expanding kind of structure right here. So if we were early, this was a sweep of this low, and then the buy was actually a relevant one. If we come to this place right here, price will give us further information. If it breaks above and interact with this guy, price will give us further information if we are to keep buying or look to sell to come and create the proper flag for the 4 hour time frame, which will take us up before we drop down. Those of you that understand what I'm saying, congratulations. Those of you that don't understand what I'm saying, look in the link in the description and come to the thought. Let's go on our next index, which is volatility 75 index. Okay, people, so this is Volatility 75 index, and like I said, directional bias. So we are looking at the 4 hour time frame and maybe the 1 hour. So on the 4 hour time frame, because I said we're going to be using market structures and price pattern just like how I do it on my own. We're going to look at the last two significant swing points, and then we look at price patterns afterwards. So the last two significant swing points, you can see that the price is actually at equilibrium level right now. We are on a previous low, a previous significant low. So this was the last swing point, right? The last significant swing point based on this time frame, and then this currently is price currently at that swing point. So since this is the last significant swing point on this time frame, we have to look further behind or to the left hand side to look at a swing point that is actually significant before that. So which is this, all right? So in this scenario like so, we're going to connect our trend line like this, one and two, and then we're going to have the resistive ends to be like so, one and two. So price actually having this expanding kind of structure, but you know that price don't only respect the trend line. Price mostly respect the zones which are the swing point. So because of that, price already here. So we have this anticipation ray here. So why I have this anticipation ray is that because we know that this is an equal low, a lot of people might have even bought already, because if you see this guy rejected, this one also rejected. If you're on the 1 hour time frame, I'm sure we have a pin bar already. So a lot of people might have bought, and liquidity have been taken from liquidity from the equals, right? Liquidity from the equals. This equal low. HMC, we call it the bear grab. So a lot of bear grabs have happened here. So a lot of people might have bought. So if price decide to sweep again, this time this candle decide to sweep again, and on the lower time frame gives us a reason for entry, then price is justified to actually go like so. We have the sweep and then go back up because it's an equal low, because people buy from double tops and double bottom, people that trade the M's and W's. And the second scenario is that price can just decide to calm down and look for a third touch of this trend line before we find our way back up again. So any of this, you have to always wait for confirmations before you interact with the market. But because of the way price is reacting like so, I am actually looking at it to be maybe it's going to be a sweep and then the continuation to the upside. Let's go to the 1 hour time frame to see further what price is saying. Okay, people, this is the 1 hour time frame. Like I said, if a lot of people might have already bought, you can see on the 1 hour time frame there are a lot of reasons to buy here. This is a pin bar, this is a doji indecision, this is a pin bar, bullish confirmation, like so. There are a lot of reasons that is going to tell you to buy already. And on this time frame, if you look at the last two significant swing point, or let's say if you look at the last significant swing point, it's this one, right? This is the last significant swing point. So price is likely to just give us that push from here after taking the 4 hour liquidity as well. Give us that push to go like so, and then we can have this guy to be aligned like this based on this time frame. Be aligned like this. So price can give us this kind of movement before we have the drop to the downside, because this will now become one, two, and then the third touch on the resistive ends, and the third touch is always the impactive touch. So you can come and give us a third touch here before we come for this uh, third touch of the 4 hour time frame. But like I said, this is directional bias, so make sure that these things rhyme with your entry time frame or your own analysis before you uh, make a decision with them. And please don't forget to share your comment, okay? If you have a different view of whatever we are showing to you guys here, share your comment in the comment section. I'll be glad. If you enjoyed the video, don't forget to like. Quickly, let's look at Volatility 75 oneness index. So this is Volatility 75 oneness index, and this will be the final index we look at before we say bye bye to you guys. All right. Now on this particular index, we're on the 4 hour time frame because we're reading directions, right? For those of you that trade this guy, it has been a bumpy ride for like 2 weeks now. I think it just give us that little moves and then drops, little moves and drops. So for those of you that remember your paper trading very well, those of you that understand, price patterns and price structures and market structures and all of that, you can see that this guy is having this arc kind of movement, right? And whenever we have this arc movement, price tend to always drop down to where the arc is facing. Price tend to always drop down like so. So this movement is not really um, a disturbing one, it's also very easy to understand. Now, if you want now filter it to looking at price structures and price patterns, you can see that we have this to be like, I always talk about impulsive corrections. So we have this guy to be an impulse, right? Then we have this correction after it. Then after that we have this little impulse, and then instead of giving us a correction, giving us a correction, we had what, another impulse to the downside. So this becomes the impulsive correction, because after this impulse the correction is supposed to continue, but instead it gave this little correction, impulse to the upside, and gave us this impulsive correction. So price is looking to, or let's say price is actually respecting the impulsive correction right now. So this is the impulsive correction, this is now the impulse. Then we are having these price swings like so. Price is swinging like so. So if I am to look at the last two swing points based on the direction of the market, based on where the market is right now, the last two swing points is here. This is the last one. This is the last, second, the last one. All right. So I can easily connect my trend line like so, one and two, right? And then my resistive trend line can go like so, one and two. Having this guy as the impulse and this as the corrective phase. This impulse has been exhausted after this correction. Those of you that don't understand impulsive correction, look in the link in the description and come to the thought. So, just like we looked at on, was it the last pair we looked at, price is also on an important level right here. Price is actually at a previous swing point, so we can have an anticipation rate there, so that when we go down the lower time frame, we can always remember that price is at a significant swing. So like I said, it's the same preaching like from the other side. Price can decide to reject after taking this low, because now price is lower than the previous low. So definitely buying is possible, because it's now giving us, that's taking the liquidity here. So price can give us that buy, and we can target this previous significant swing to be our target, and then after that we can look to the third touch of this. And price can also decide to come down, give us a third touch here before dropping. Now the reason why I'm saying price can reject this guy and buy is because if we go on the 1 hour time frame, we're going to see a kind of structure like this. We're going to go there shortly. But I said to you guys, like from the arc way, we're looking more to sales. But you know that we can't just sell. Price cannot be, price can't go direct. There has to be ups and downs, but the trend will be like so. So let's go to the 1 hour time frame and see more information. So this is the 1 hour time frame. Like I said, when you go on any time frame, your focal point should be the last two significant swing points. So on the 1 hour here, you can see that we are in a little downtrend, like so, one and two, and then we have this. Price is actually rejecting right now. So that's why I said we can look to reject these equal lows, right? These equal lows before we drop, because we have from our mindset that our arc is going to be a seller unless it's trying to go back to interact with the arc levels again. But this is what I see on Volatility 75 one is. So guys, please don't forget to share your comments. Don't forget to like the video. Don't forget to subscribe to our channel if you are new. For those of you that want to trade with us daily, look in the link in the description and contact us for uh, our daily trading signals. If you want to join our community, contact us for mentorship. Thanks for watching and stay high.